Hi everyone, welcome to Strata's Masterclass on all about fractional ownership. I am Somali Sen, Client Success Manager at Strata. Today we have Rachna from the investment team who will help us understand the topic of fractional ownership. Welcome Rachna.
Thank you for having me, Somali.
Thank you. So Rachna, why don't you tell our audiences, our investors, everybody about fractional ownership? We all want to know what is fractional ownership. So you can help us understand the topic in the more simpler version.
Right. So, if you had to purchase an office space in Bangalore or any other tier 1 city, how much do you think one floor would cost?
It would be around 20-30 crores.
Yes,
The bare
precisely.
minimum.
Yeah, on the bare minimum.
Right.
And that would make it inaccessible to the larger audience, right? So what a fractional ownership does is it allows an opportunity to investors to invest in grade A commercial assets with a lesser ticket size, and then they can generate significant ROI by investing in these assets. So, for example, you mentioned that a minimum floor size would be 20 crores. If an investor invests say 2 crores, he would be a part owner or a fractional owner, precisely 10% in this case, owner of that asset. So this is what fractional ownership is all about. They can be part owners of a larger space and get the benefits of investing in the underlying commercial real estate asset.
Okay, right. So you mean to say that if I have a minimum token size, so if I have around 25 lakhs with me, I can own a grade A real estate?
Precisely, that's what we exactly do at Strata. Investors can invest with a minimum ticket size of 25 lakhs and own several commercial real estate assets like an office space based in Navi Mumbai, Pune, a warehouse based in Hosur, or an industrial opportunity based in Jaipur. That is precisely what fractional ownership is all about.
Amazing, amazing. So now getting to the later part of the questions, can you tell us some differences between REIT and fractional ownership? Like, what do you think are the exact differences that we can differentiate between REIT and fractional ownership?
So a REIT would be publicly traded units as such, and fractional ownership, you would be getting shares of a private limited company to which the property is registered. So REIT would be like a mutual fund investing in 6-7 plus properties, wherein it's already predetermined which asset type, which location. Meanwhile, in fractional ownership is like a stock, wherein an investor can choose which location or which asset type he could invest in. So currently there are 4 listed REITs in the market. 3 of them primarily investing in office spaces and 1 into malls as such. Meanwhile, in fractional ownership, they can go beyond these asset types and invest in warehouses, industrial opportunities, retail opportunities, etc.
Right. And some of the advantages of fractional ownership, if you could tell us.
So one key advantage is, for example, REIT is listed in the stock market. So it is subject to that volatility. For example, Embassy REIT in April 2019, it had listed at roughly 330, went up to 450 in a few months in 2020, and then currently it's trading at around 310. But the underlying property has not moved so much in terms of returns. Whereas in fractional ownership, it's exactly mirroring the returns of that property. So other advantages of fractional ownership vis-a-vis REIT would be, in REIT, the yield depends on the entry price at which the investor is entering in. Meanwhile, in fractional ownership, it's dependent on the yield as well as the escalation terms, which has already been predetermined in the lease agreement. Other than that, there are several risks associated in REITs. For example, they can take debt level up to 49%. Meanwhile, in fractional ownership at SPV level, there is no debt. In fractional ownership, 100% of the cash flows have to be distributed back to the investors. Meanwhile, in REIT, they can distribute up to 90% minimum, for example. And in fractional ownership, all 100% is into revenue generating assets.
Right.
Meanwhile, in a REIT, 10% can go under constructed non-revenue generating assets.
Okay.
So these would be the key advantages of fractional ownership over REIT.
Right. So now that we talk about the advantages of fractional ownership and that we are getting a lot of traction on fractional ownership, I'm sure our investors want to know what is the future. You think we have a future, and what is the future of fractional ownership?
Yes.
If you could tell us about that.
Definitely. It's already a 5,000 crore industry in the last 4-5 years as such, and it's extremely rapidly growing as well. So HNIs want to diversify beyond their equity, debt, and traditional real estate asset allocation. And fractional ownership is extremely well positioned to give significant alpha as well as diversification in the portfolios of their investors. Also, in May end, SEBI had come out with a consultation paper to regulate fractional ownership industry under MSM REIT, micro, small, and medium REITs. So, once the final paper is released, it should further, expand the scope and the scale of this industry by increasing the supply, increasing the number of participants. So extremely bullish about this industry, and there's just one way forward, which is upwards.
Great. So now we know that we have a lot of future in fractional ownership. Now, I'm sure like most of the Indian mentality, and I'm sure, generally, we want to know about the liquidity because, unlike other normal commercial real estate, how it works, we want to know how does one liquidify fractional ownership, if they have fractional ownership. If you could tell us about that.
Right. So, unless an investor's horizon is at least 4+ years, we would not recommend them to invest in a strata or even in commercial real estate as an asset class. The most ideal way of exit is the asset sale itself. So, after 3 years, every year we conduct an online poll with the investors of each asset. And if 75% of the investors vote to exit, then Strata will execute that sale transaction. So investors are themselves the owners and have the right to choose with a poll as to when to exit and at what valuation to exit as such. However, if there is in any case of emergency where the investor wants to exit, their lock-in is 1 year. After 1 year, they can exit, but subject to finding another buyer. So, they could identify the buyer themselves, or they could reach out to their investment manager who would list it as a resale opportunity to its existing user base of 50,000 plus users and help identify help identify a buyer for their fraction.
So now that we know about the liquidity options, we want to know, Rachna, how does Strata identify the properties? And how do we go about, why would investors invest through Strata, and what are the advantages that our investors can get? Why don't you, give us some insight of that?
Right. So it's an extremely rigorous and extensive process in identification of properties. So while evaluating a property, different factors like the rental yield, tenant pedigree, micro market scope, what could be the capital appreciation and what has been the trend in the previous years, all these factors are evaluated before a property is listed on the platform. And it follows an extensive funnel through which different filters are there to identify the property and finally make it available for the investors to invest. Once a property is identified, detailed asset, legal and technical due diligence is undertaken by our in-house legal team and as also a third-party law firm to ensure that the property is extremely free of any legal encumbrances and the title is with the existing owner as such. So after this extreme due diligence at the legal level and at the technical level, the tenant's pedigree is also researched extensively to ensure their balance sheets are strong and solid and the rents get credited on a regular period. As well as we do background research about the tenant to see how their tenants have reacted in other properties as such. So after this, there's an in-depth financial analysis to identify that the risk-reward ratio is finally beneficial to the investors also. And with the final go-ahead with the investment committee, that's when we list it on our platform. So many layers to ensure that the property is finally cutting to be in the platform. For example, in the last financial year, properties worth 30,000 crore was evaluated, and only 400 crores came up on the platform, roughly on a 1% ratio. So this is the rigorous evaluation that's done before it's listed on the platform.
Right. I'm sure this gives a lot of confidence and trust to our investors out there who are investing through Strata to invest on the fractional real estate properties. So Rachna, I have some quick questions for you. Why don't you just answer them?
Yes, absolutely.
Okay, first one. What are the yields that we can expect from Strata?
Around 8 to 10% annually.
How many assets does Strata come up with?
So in a month, 1 or 2. We've had parallel assets also of late.
What are the three things you love about fractional ownership?
Access to good grade A commercial assets, better liquidity, and lucrative returns. Who can say no to that?
How many assets did Strata launch till date?
33.
What's the AUM of Strata today?
1,200 plus crores.
Thank you, Rachna. Thank you so much for giving us such an insight of fractional ownership. And I'm sure now the investors and our viewers have a lot of trust in the whole concept of fractional ownership. Like we say, we have explained that it has a future, the differences between REIT and fractional ownership, and a lot of other insights that you've provided us, and how an investor can invest through Strata, and the details and the due diligence that we do, the reports and everything that are linked with it. Now, for y'all, if investors out there and our existing investors want to invest through Strata, please visit our websites. You can refer to our YouTube channel for more information. Thank you so much, Rachna, once again.
Thank you.
It brings us to the end of the masterclass today. Thank you.